Earlier today, Apple unveiled their Vision Pro, their mixed reality, augmented reality headset for $3,500. When I look at it, it does look very sleek, where you don't have any sort of additional controllers. You just have this headset with a bunch of cameras around it, and you can see through it. You can toggle back and forth whether or not you want to have, a full virtual reality experience where people can see, oh, you're immersed in something right now, or you can, people can actually see, oh, I can see your eyes, I can see what you're looking at. And just because it has these cameras on its side, it can pick up your gesticulation. So you don't need to have some sort of controller. You could use your eyes to navigate around what you're looking at, and then if you want to like double click or focus on something, you can quickly do that. This does look like it has the potential to become one of the next platforms in terms of consumer, computational interfaces. This could be it. A little too soon to tell, and I'll show you why in just a second. But there is some really cool features here. I mean, you could create some sort of digital avatar for yourself just by wearing it, where based on the cameras on the inside and the outside, you can easily have some sort of FaceTime experience with other users where they think they're looking at you, possibly without even wearing a headset, where they think, oh, it looks very much like normal Daniel from Unrivaled Investing, and he's not wearing a headset. So that does seem very sweet. And you are seeing, I think, generally favorable responses from the audience and from the viewers. This was once again unveiled earlier today from Apple. One investment manager, Trevor Scott, he calls out how the Quest, so this is from Facebook's Meta, now looks like a Kickstarter, application, effectively something that's, fundraised or not doing very well. You see influencers saying, look, I can't wait for the announced price. They hadn't announced the $3,500 price yet, and I'm willing to pay $1 million for Pair. So he's super pumped up, and once again, going back to Meta's products, you're used to using these handles, these controllers, whereas this is supposed to be like a flawless experience where all you need is a headset. And to think about, well, what type of impact this could have on Apple, some are saying maybe, and they're supposed to go on sale at the start of next year. Maybe they sell 1 million units next year, because keep in mind, it's a $3,500 price point. $3,500 price point, and Financial Times calling out 1 million units. That's still mostly a rounding error for Apple. I mean, this is a company that's doing $400 billion in revenue. Really, the key driver for Apple is still their iPhone business. And you can see from 2020, it went from 140 billion to 2022 of 205 billion. So really, the key drivers here is, where's the iPhone going? Where's their service business going? Could you see margin pressure, let's say in the future, if they're forced to cut back in terms of the rate that they're able to charge, and effectively various different apps on their app store? So that's really a question. Those are the two biggest components, both services as well as iPhone. So when you're thinking about the business, the question is, where does Apple go from here? First, a quick plug. I recently bought more of a stock that I think is over 300% upside that I called out to my subscribers at unrivaledinvesting.com. I also expect to raise prices soon this month. So now's the time to act if you'd like to lock in a favorable rate and take charge of your investment journey. In full disclosure, this is not financial advice. So as we look at Apple made a new all-time record high today on this very exciting announcement. And then once they revealed that $3,500 price point, the stock did reverse lower. Now it's still up significantly, up nearly 40% year to date. So clearly there's a lot of momentum, a lot of excitement about Apple. When I start an initial assessment of a business, now I'm going to AI Ticker Chat, which uses cutting edge artificial intelligence to analyze businesses. So I go to AI Ticker Chat, I look at the latest earnings for Apple's, and it talks about how, quickly doing a quick assessment, look, revenue down 3%, earnings was effectively flat year over year. The only reason why it's unchanged despite the decline in sales is due to the fact that they're buying back stock, but you are still seeing record figures in things like services as well as the iPhone in the March quarter. So in March, you saw record iPhone, and you're still seeing Apple as a core business growing. Their install base reached record high during the quarter. So these are the things I like to see, but still it's just not hyper growth. That's an important understanding when you're thinking about the long-term growth potential and what's going to drive your return, as a potential investor. So looking at Apple now, it's shy of, let's say, $3 trillion valuation. And I, automatically thinking about a company with a nearly $3 trillion valuation, I automatically get a little cautious just because you do have a little bit of a history here with the largest companies in the world oftentimes have a harder time keep on growing. Now, sometimes it works out. But oftentimes it just gets harder and harder. Trees don't grow straight to the sky. And so I'm looking at a business with, 400 billion, let's say, in sales. I'm assuming that they actually, unlike the first quarter or their second fiscal quarter that they recently reported, I assume that they're able to inflect back to growth for the year. Maybe that's wrong. Maybe it sticks to that negative 3% decline that we saw. But, here it is. I'm giving them credit for it. I'm assuming their profit margins stay around 30%. And the reality is, in order to get a satisfactory return for Aapl, and keep in mind, this is a hypothetical valuation framework, just looking at the different inputs, in order to get a satisfactory return of, let's say, a teens rate, you're going to need to see, I think, teens growth in their business to really drive that, because I think you're really pushing, what you can see from a valuation perspective. I don't think you're going to, this headset, it's really, really neat. It's really impressive technology, but one should understand it's a rounding error relative to where, the iPhone business and their services market is. So unless they really catch lightning in a bottle a second time, and that starts scaling up very quickly, and a lot more people than 1 million are willing to pay $3,500 for the device, then you might say, oh, there's a lot more potential here. So it's too early to tell for me to be super optimistic, like, oh, this is that next big thing, and it's not going to cannibalize the iPhone, and it's additional to it, and it's going to drive that growth. I mean, part of the growth could come from just continued pricing power, and they've certainly shown that with the iPhone over time. So they could continue, just raising prices, keeping their steady user base, and their user base is reaching new records. So these are favorable aspects. So if you think, they're going to be able to grow between 8 and 11% over time, you need to say, hey, it really needs to be closer to 11% plus in order to drive, I think, a higher return. Just because you already are trading between, let's say, 25 and 30 times earnings, assuming around 30% profit margins. And so unless you have, unless valuation expands further, which I don't think you're going to see, if anything, I think you could see valuation contraction, it does make it hard to say, oh, this is just going to be a terrific home run. If you see something closer to 5% growth and continued buybacks, you could still look at a significant decline over the next 5 years. So I personally think that there are easier investments out there. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in to Unrivaled Investing.